Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. If you like making money, click subscribe. I talk a lot about undervalued investment opportunities out there, and there's a lot out there. They're mainly in the commodity areas. So today I want to talk about one of those opportunities. It is uranium. I know I did a uranium update yesterday. This is going to be a long-term outlook or big picture technical analysis of some of the companies that a lot of people hold. And I'm also looking at kind of uranium as a big picture view. So we'll go in here and do some long-term charting to see what I've got. This is a uranium update, long-term charting. And some of my favorite charting's done using long time frames. That's when you see the big picture. And the better you understand the big picture, the stronger the hold you'll have on your shares, the more conviction you'll have. The better and longer term a chart looks, usually they provide a good launching pad for a bull market to launch from. So we're looking for those long-term good patterns that we can kind of springboard off of. I think we have created the launching pad for, quote, the launch from a long-term bull market. Keep in mind, these are long-term and do not materialize overnight. These are not short-term investments. These are looking at the big picture for the very big move that's coming over the next decade, or maybe even longer. It depends what the fundamental analysis and supply-demand balances are. If the supply and demand balance of uranium is still in a large deficit, you want to hold on. And this is not financial advice, but rather financial education, and all information should be researched further for your understanding. So first, I'm going to look at a very long-term chart of uranium. This is very long. And just to show you kind of the prices and production. So if you notice here, the blue line is price. This is the real price. So price over here per pound. This is your time. They call this the emergence years, the stagnant years, and then the renaissance years. You can see price coming on up, and you can see this delayed response by production. And then you can see the price kind of pulls back, and then the production pulls back. Another major price spike, another production movement. And you can kind of see that production almost lags the price movements. Now, if you look at the price movements, and I'm familiar with the price movements here and here, maybe not so much back here, but when you look at this, and we were off the gold standard, this was a housing boom that was very inflationary, that caused what I think is this move here. And that is an inflation commodities boom during that time frame. We also had a commodities boom from just 98, 99, 99's about the bottom, all the way till 2008. And this was also during that commodities boom. So one thing to keep in mind is that money flows matter. Money flows are the flow of money out of some sectors and into other sectors. And what I have seen throughout history is that money flows when you've got a nice, cheap commodity like uranium, oil, whatever it may be. Money will get moved from one asset to another asset when interest rates start to move higher. So one thing you want to look at when you're looking at a potential move in uranium is you want to keep your eyes glued to two things. You want to keep them glued to inflation, which will manifest itself in a weaker dollar. And then you want to look at yields. If yields are going up and the dollar is going down, I think you're going to see a very strong movement of money rotation into commodities in general. And uranium, there's just nowhere really to absorb that money flow. And this is what you see in these charts is they just go vertical because they're such small sectors and the money can't really flow into it very easily and quickly. So the determining factor or the great equalizer is a much higher price. So what I want to see, and if you look before these, I mean, these are coming down, it's coming down, and then you see this kind of flat portion, and then we popped up. Same thing happened here. We were coming down, and we kind of like flatlined here before we went and popped higher. I am looking for the flat line and the pop higher in these charts coming up. So these are individual companies. I'm just looking at randomly selected individual companies that people like. So this is Denison Mines. I know a lot of people like Denison Mines. And you can kind of see this stair step lower. And all of a sudden we hit this sideways movement for a good 4 or 5 years. And you can see that we've got a nice kind of channel that it was trading within. And then we see this nice big pop higher. Now, someone would say, well, it's great that the price moved, but how do you know this is a bottom? And the reason I think it is because you look at this volume here. The money is flowing in like mad. And that's what I look for at bottoms. I look for that volume to kick way up. The volume kicks up either at tops or at bottoms. So when looking at this, I'm getting excited because one, we did break we'll call it kind of a flat bottom here, this channel. We did break to the upside. We're doing kind of a flag pattern, and we broke it with some volume. So it means something. And I want to see this across the entire sector. That's DNN. That's looking pretty good. And then looking at CCJ, this is Camco. And again, we're looking for volume. We're looking for chart break patterns. We have this bottoming pattern where it's going sideways in the sideways channel, and we broke higher, back tested, and then pulled up. We did it with some good volume here. So again, it's looking pretty good in terms of a break. Now, could you say that this was a breakdown here? We've got a kind of a sideways pattern here, and it broke to the upside. You could have said, yeah, I got a little bit of volume, but it's not too much. But a volume like this is almost double the volume. So I think this is substantial. I think we are breaking out of this basing pattern. And when you look at other market conditions, the dollar, yield, commodities in general, and how cheap they are in relationship to other things, everything is getting tied together where I think we're going to see a big launch in commodities in general. And copper and platinum are our leaders, and they are telling us that this is coming. Here's UU. Again, we've got this nice big basing pattern here. Kind of comes up, almost, this is the March sell-off, and this is almost a reverse head and shoulder pattern, breaking to the upside. We're coming on up, and whether this goes down or up or sideways, doesn't really matter. The pattern's broken. And the pattern broke on massive volume over here. I would say the volume started kicking up in mid-2018 and really kicked up in late 2020, early 2021. So people are definitely buying this. Now it's just a matter of time. It's about being patient and getting your shares and just holding. That's probably some of the hardest things to do as an investor, is to wait patiently and hold. Here's URG. Again, we've got this big long downtrend pattern or downtrend line that broke to the upside, and we're flagging it out here. We've got nice big volume. And the thing that makes me very happy about this is that we're seeing it across all of these companies. It's not just one company or two. It's everything in the entire sector. And we're seeing it across all of the different sectors in commodities. This is strengthening the bull case for uranium. And I know a lot of you guys, you're uranium only type people, but you got to look out the side view, the sides of the car when we're driving, because the traffic around us matters. We're going to be going at the speed of commodities, so to speak. And if commodities are all jetting higher, uranium is a laggard in the sectors of commodities. So if we're seeing copper pull up, iron ore, all these other nickel, those are just leaders, and gold and silver and all the precious metals. Uranium is a laggard, and it will come, and it's going to come with a bunch of theory behind it. NXE, another great pattern that I really like. Nice big downtrend line break to the upside. And you can see this thing moving. And what I like about it is the pullbacks are muted sideways. Means that this is a very strong move behind it. And look at the volume down here. Volume. People are buying the living heck out of this. Paladin Energy. We got a big old downtrend line here. It broke to the upside, doing the flag pattern just like all the other companies. Massive volume. That volume is huge. So that's good. This is a smaller exploration company, Sky Harbor. Still hasn't broken out of its downtrend line. It's just, it broke out and pulled back. But we're still chilling right there. We've got lots of volume buying this. I don't see any reason why this wouldn't do well in a uranium boom. It is an exploration company, a little bit more risk. Here's Bannerman. This is a higher cost African producer. Nice big trend line here. 2014, kind of basing out. Broke to the upside and we're flag patterning it. This almost looks like a silver chart. Because silver did the same thing. It went sideways for a while and then just did this huge flag pattern. This looks like almost like a play button. And look at the volume here. Big volume. We're seeing volume everywhere. This is looking pretty dang good. This is URC, Uranium Royalty Corp. Again, whenever you break out of these big patterns, you can see these big moves. Now, would I buy it up here? I don't know. I mean, it's good, but I'd like to get it like on a pullback, almost like Bannerman here. You know, a little bit of a pullback. Yeah, it didn't pull back too much, but that's Uranium Royalty Corp. Some people like the royalty companies. I do too. So my final comments here is uranium trades just like other commodities. They do well during a commodity boom. Uranium has a large inflation component to its price as it trades when money flows into commodities with this sector. I think prices will surprise people when the money starts flowing into this sector massively from a rotation of money from bonds and stocks into these sectors. And you're going to ask, what is going to spur that rotation? It's going to be interest rates. So watch interest rates. If interest rates continue to move up, it's going to put pressure. Well, one, bonds are being sold off if interest rates are going up. That's what's causing the move up in interest rates. So this is the way that it works. So number one, you have inflation, and that comes from the real estate market. When people start feeling that inflation, what happens is it creates a real negative rate. It means that the inflation rate is greater than what interest is being paid on your bond. Therefore, you're losing money. It is a negative real rate. The people with bonds sell their bonds, and the equalizer of the bond market is yields or interest rates. So interest rates go up until you equalize the buyers and the sellers. If inflation persists, and it persists in ever greater quantities, more and more people will sell bonds because they don't want to lose money with a real negative interest rate. They're going to continue to sell until the interest rate goes to an acceptable level in relationship to inflation. Now, if inflation's on the move and continuing to go up, what happens is interest rates will chase inflation higher, and eventually interest rates will catch the rate of inflation where you get a real rate, not a negative rate, but a real rate. That real rate is what's going to kill the commodity bull market eventually. It will kill gold and silver. It will kill all of the other commodities because the inflation component ceases to exist and push commodities higher because commodities are priced in dollars. And when you have a real negative rate, the dollar goes down in value. It's that simple. So if you guys like this content, give me a thumbs up. Let me know what you think. Leave some comments below. Love to hear what you guys have to say. And thank you for listening. This is Finding Value.